Hey, hi everyone. Welcome to Primary Market Chatter brought to you by Sunday Investing. This is our July first week IPOs edition. If you can hear me, please just message that you can hear me. Tanmay, can you say something? Because I can only see you as a listener. You're saying that you are in. But can you try to say something?
Can you hear me?
Yeah, I can hear you.
Don't
Perfect.
know what had happened.
Perfect. Yeah. With that, we are back with another episode. This one's a very quick episode because we'll only be covering two companies. There are just two companies that we have to cover. Before we actually get started, just want to highlight that A, we are not SEBI registered. None of what we say is qualified opinion. Please do not take as one. We just like to discuss IPOs on what we feel with respect to fundamentals of the company, etc. And that may play out, that may not play out. Please do your due diligence and apply basis that only. Apply or not apply basis that. Please do not do anything basis our recommendation. This is just a show to help you with what we feel opinion is. Second, if you haven't followed our YouTube channel, please go ahead and follow it. The link is in the pinned comments there. I've put in the YouTube channel as well. Please go ahead and support it. Uh, that's where we kind of talk about all the companies and put them, whatever shows that we have, we put them there. And then uske alawa we also interview promoters, etc. when they're coming for IPO. We have done like some 41 of them. They are also on our channel. And then we also have started a new series called Capital Conversations, where we had spoken with Mr. Prabhakar Kudwa, and then we have a new guest as well, which we'll make live over the next 15 days. But we'll be talking to Mr. Deepak Shinoy. So very excited about that as well. But yeah, that is with respect to the channel. Please go ahead and subscribe. With that, let me set up the agenda for the day. We'll be talking about two companies. One is Kusumgar Limited, and then second is IC Electrical. So those are the two companies for the day. So probably we'll start with Kusum and then cover IC because Rohit has to do IC. Rohit will join by like 8:30 is what he has told me. So we'll probably start with Kusumgar and then come to IC. Setting up Kusumgar very quickly. Incorporated in 1990. The company is a manufacturer of woven, coated and laminated synthetic fabrics known as engineered fabrics, which are in a wide range of industries, including aerospace and defense, industrial and automotive, and outdoor and lifestyle segments. So it's a technical textile company, most of which is used in defense and aerospace. So that is where it becomes hot. We'll try and understand the company. In terms of the IPO, it's a 650 crore IPO. All of which is a OFS. कंपनी में कोई पैसा नहीं जा रहा है. प्रमोटर्स पूरा एग्जिट पार्टली एग्जिट कर रहे हैं. 650 करोड़ का ही प्रमोटर्स के पास जा रहा है. आईपीओ आ रहा है 4400 करोड़ की वैल्यूएशन पे. सो इट्स अ 650 करोड़ रेज एट 4400. सो सम 15% डाइल्यूशन. FY26 फाइनेंशियल्स की बात करूं तो 711 करोड़ का टॉप लाइन है एंड 98 करोड़ का बॉटम है. सो गुड हेल्दी 14-15% पैट मार्जिन है कंपनी का. और कंपनी अगर पीई के बेसिस पे बात करूं तो सम 45 टाइम्स आ रही है FY26. सो एटलीस्ट हाई लेवल तो पी थोड़ा सा हाई लग रहा है फॉर FY26. We'll try and understand growth कैसी होगी. In terms of the LM is Axis, IIFL and Motilal. So over to you, Tanmay, to talk about Kusumgar.
Am I audible? Hello.
Yes.
So Kusumgar Limited is a leading manufacturer of specialized engineered fabrics and technical textiles, serving high performance applications like aerospace and defense, industrial and automotive. It is also a supplier of engineered fabrics to Decathlon for athleisure wear. The company manufactures high performance fabrics using polyamide polyester filaments along with polyurethane chemistry. Its products are designed to provide strength, durability, abrasion resistance, comfort, air permeability, and waterproofing. So the company has got about 1,000 SKUs, unique SKUs. 60% of its revenues are derived from the domestic Indian markets, and rest 40% comes from the exports. So basically, now I'll put it in this way. I'll just divide the company into four segments, which are its revenue segments, and I'll explain each one of them in depth. So it would be easy for the viewers and listeners to understand what exactly the company does. So they have got four segments. First is aerospace and defense fabrics, from which they derive 32% revenue. Here they manufacture and supply parachute fabrics, which are used in cargo parachutes, drop parachutes, tactical assault parachutes. Uh, Also, they are used in defense gears, tactical clothing, and high altitude parachutes, recovery parachutes, space module recovery, and all these things. The 23% revenues come from aerospace and defense solutions. So what they exactly have done in this category is, in the first category they were supplying fabrics for supporting the manufacturing of all this sort of parachutes. The second segment, they are doing an end-to-end solution in which they themselves supply those end-to-end solutions, in which they have got stuffs like aerial systems, stealth systems, tactical assault parachutes, rapid deployment systems, recovery parachutes. So it is a complete end-to-end solution. So they take the order, complete, and then supply as per the requirements. They have the third segment called as industrial and automotive fabrics, in which their fabrics are used to manufacture convertible tops, sunroofs, interiors of your automotive vehicles, railway, medical equipments. There is something called as reinforcement fabrics, then inflatable rescue boats, aircraft evacuation slides, air holding structures, etc. The fourth segment, what they do is called as outdoor and lifestyle fabrics, which contributes to about 19% of its revenue, in which they've got segments like athleisure wear, rainwear, winter wear, jackets, backpacks, and sleeping bags. So they primarily manufacture for Decathlon, and also for some other vendors whose name hasn't been disclosed. The company is a pioneer in parachute fabrics among major companies outside US and China in military specialty military parachute fabrics. The company is raising about 650 crores, out of which full of it is in full offer for sale, and whole 650 crore is being raised in an offer for sale for the promoter. So there is no investor who is seeking an exit. Coming on its financials, FY24, the company delivered a revenue of 468 crores, and an EBITDA of about 132 crores, which is about a 28% margins. 84 crore is what their PAT is. FY25 they did about 779 crore top line, 188 crore ka EBITDA, and 112 crores ka PAT. So their EBITDA margin dropped from about 28% to about 24% in FY25. In FY26, the revenue fell by 11% to 692 crores. 188 crore was the EBITDA. So EBITDA number has been the same between FY25 and 26, but just the revenue has fell by 11%. And the PAT also fell decently about 15% to 98.2 crores. Now, the biggest question here lies is, why did the revenues fell in FY26? So this was asked to the management, and they had commented upon key, that two major contracts, out of which one was expected from Indian Navy or Defense, if I'm not wrong, which got delayed to Q2 of FY27, and also they had a major US maritime order which also got delayed due to the Trump tariffs. And in Q1 that has been already delivered, so that revenue has been shifted. So that has led to a drop. So अभी इसका FY27 के अगर मेरे को numbers पे आना है, तो what I have done is I have estimated about a 20% top line growth, because the defense fabrics in India are growing at about 18-19% CAGR. So I've considered 20% as a whole, and also added upon those shifted orders whose number has been disclosed, but I've just got some figures from somewhere, and these are my internal calculations. So these guys should do about 1,050 crore to 1,100 crore kind of a top line in FY27, which should be an insane growth, about 50% odd. And a bid of around 300 crores and a PAT of about 170 to 180 crores is what their FY27 estimates suggest. The company is coming at about 4,400 crore market cap, which values the company at 44.8 times FY26 PE and about 20 to 23 times EBITDA. The company has also done a pre-IPO in September 2025, where they had diluted about 10% equity at 3,800 crore valuation. So the IPO is coming at about 14.9 to 15% premium to what the pre-IPO round was done. The pre-IPO round saw participation from investors like Motilal Oswal, Edelweiss, Park Meadows Family Office, White Oak Capital, Ashoka India Equity, Frangipani Capital, Nuama, ARA Investments, LCD Investments, PM Family Office, Tibrewal Electronics, and Shraddha Family Office, and another two, three individual names. So now coming on their positives and negatives. So the biggest positive is the segment is going through a lot of structural tailwinds in which there is a push of make in India, where government wants all this defense fabrics and related technical textiles to be manufactured in house. And so this is basically not a less of an expansion of the market, but sort of a shift from your Chinese and American vendors to pure play Indian vendors. The second thing is the even the segment of defense and aerospace fabrics is growing at about 19% CAGR till FY 29, if I'm correct. So 19% growth at an industry segment level for next 4 financial years is quite good. Uh, Another thing is there are lot of entry barriers. There are very few players in this segment, which operate, in the sectors and all this portfolio. It is very tough to get qualifications for all these things, and also, making relationships. One good thing which I saw is, even though they are supplying to defense, many of their exports are deemed exports, and not necessarily it has to go through the government as such. So their working capital cycle is fairly less stretched than the other pure play defense and aerospace companies. Obviously, this is not a pure play defense company as such, and a direct beneficiary or an adjacent company or segment to it, but still the working capital matters, as it also reflects in your cash flows and also the working capital cycle. Uh, Another good thing is they've already did a 2.5x capex last year, which has got operational already. So their capacity utilization stands at about 50% for the processing thing, which includes dyeing, finishing, printing and coating, and about 62% utilization on their weaving and laminating end. So the company can easily double their revenues. Matlab, I'm saying in terms of production and volume growth. So FY 27 shouldn't see a lot of utilization coming. It should be around 75 to 80%, because कुछ revenue तो पिछले साल का shift हुआ है. So that should just get added up. So the still FY 28 will also have sufficient capacity with them, but for sure they would be needing another capacity coming up, maybe for FY 29 growth. Another thing was, the promoter quality. When I was listening to one of the promoters, the main, the person who had founded the company, which was about 5 6 years back interview. So still there is insane level of clarity, very high promoter pedigree, and he sounds too good. Even the recent interviews were quite good. I'm not saying the IPO interviews, but just before the IPO, there were few interviews which were done. I would say, coming on the negatives, first negatives I feel is that TAM is very limited. I don't feel this is such a huge segment which can go if insane 5 10,000 odd crore segment. Yes, there might be that much TAM, but there are other overseas players there. So I don't feel the TAM is such huge which can take this company to some insane scale. There's a limit to their revenues. Uh, the second is, I feel the typical defense and aerospace thing, which is your working capital stretchment. So it is lesser than the other pure play defense companies, but still not that small. I know the cash flows aren't that great, which I was expecting by looking at the other things. Uh, that's it. बाकी as such कोई खास negative नहीं है. The debt is almost very less. There is no issues on that, and the return ratios are quite good. Now coming on how to value this company and what do I feel about the company. So if I just look at the valuation part, it is coming at about a 13 to 15 times FY 27 EBITDA, and around a 25 times or P FY 27. So I feel what is going to happen is, everyone knows that the H1 Q1 Q2 of FY 27 is going to be tremendously good for this company because the US maritime order has shifted to Q1 and that government large order has shifted to the Q2 or the partial Q3, but I feel that should be in Q2 itself. So markets should already discount that crazy number in the H1, which should take the stock to some insane multiples for I feel short to medium term. So I feel this can be easily valued at around a 25 times EV/EBIT and like around 35 to 40 P on FY27 for the medium term, which should see an upside of about 50 to 60% in this company. But like what I personally feel is this will list at an insane number, anywhere around 30-40%. It should get listed easily. It should even see some upside even from that number. But when that those numbers of H1, crazy numbers of H1 come in, the growth is going back to that number of 15-20% or because it would be at that around $130 million, which is quite a decent base to have. That growth will be around 50-20%, and it cannot be going beyond that is what I personally feel. Max it can go is 20 to 25%. And end of the day, it is a very high end technical textile company, so it has got some cap on the valuation. So what I feel is it can be definitely applied for listing gains as well as for short term, but I would be not very comfortable holding this company for long term in case I get an allotment. So I feel it is an apply for listing gains as well as for short term or even 6 months horizon, but not more than that. I feel once the Q1 numbers and Q2 numbers are out, this stock should be flat for a very long time or even see the stock going down because the 10% equity of the pre-IP will also get unlocked and also the IPO will also see some anchor book openings and all that stuff should happen. And also there was some small 2% pre-IPO which was done about 2-3 days back. I'm yet to see who are the names, but that I'm expecting there should be some family offices or mutual funds coming in. So the promoter holding was about 76-77%, which has now came below 75%. So there is no hanging sword of any further promoter selling coming up on that MPS rule thing. So quite positive on the company. Very good company, good capabilities, good segment, solid promoters, quite unique of a company. FY27 should be great. Valuations are good. I wouldn't say they're expensive, neither not also very very cheap. Decent, reasonable valuation should do well, but not very positive on the longer term if the stock goes 50 to 60% above issue price in short term.
Got it. Thanks, Tanmay. A question is basic. How big is the TAM market? कितना बड़ा? Because like when I was reading about the company, I thought that the market is rather limited, right? And most of the like tailwinds are because of Indianization. इनको orders मिल रहे हैं, so अभी they are able to grow very very fast, right? But how big is the inherent market for some of the parachute clothing, etc., that they do according to you?
So there are, I would say segments to it. First is you are correct. Even I had mentioned it earlier, ki the time is pretty limited. But there are no specific FNS or some rate share report to it. But I was reading somewhere that a specialized, aerospace and defense, engineered fabrics globally market is around 40,000 crores is what I was reading. Specialized technical fabrics, and I feel a large contributor, I would say more than 50-60% of that market is with US and China, and partially with Russia. Russia is another above that 50-60% market. So I feel that is a limited number, and I don't see Indian market being anywhere about 2,000 or 3,000 odd crores. 2025 होगा ऐसे कोई number होना चाहिए. I'll get the exact numbers, but मुझे तो नहीं मिले numbers, but that should be around that numbers. Now coming on the TAM part, yes, aerospace and defense fabrics as a thing is limited, but as they're going into full solutions, they can take that bigger pie out of it and increase the TAM. But I feel the larger TAM lies is in that auto, industrial, and athleisure wear. We are seeing Decathlon growing at some insane numbers on a larger base, and going forward also they've got a lot of plans coming up. The industrial and automotive markets is also growing, and such companies are very rare to find. So I feel that segment both combined are currently about 40% sort of a revenues, 40-45% revenue, which can go till 60% in maybe a 2 years down the line. So that segment has got a lot of time coming up, but aerospace and defense solutions and fabrics, I feel there is a limited time to it, and I fully agree upon that point.
Got it. But PE more majorly is because of the defense and aerospace
Correct. No, even that
growth,
segment
right?
for them is growing. So if you just look at the revenue split now, FY25 mein the aerospace and defense had a larger wallet share, and FY26 mein actually that has came down just because of the order shifting. But also there is a second question to it कि यार अगर एरोस्पेस एंड डिफेंस सॉल्यूशंस और फैब्रिक्स का अगर धंधा FY26 में कम हुआ है तो मार्जिन का कम होना चाहिए था रादर देन बढ़ना चाहिए था बिकॉज वी आर अज्यूमिंग कि athleisure wear and all that industrial car interior things should have a lesser margin, but obviously the margins are high, actually comparatively higher than aerospace and defense as per the company's book. So that is where the question lies: what are the sustainable margins going forward? But yes, that product mix should change, going to more going towards that industrial, automotive, and athleisure wear segment in next 2 years.
Got it. Understood. I also feel that this is a good company, probably prices in quite a bit of goodness. अभी सचिन होता तो वो बोलता फुल ओएफ से तो हाँ प्राइस तो होगा ही बट एटलीस्ट इन शॉर्ट टर्म दे शुड बी इनफ फ्रेंजी बिकॉज द नंबर्स वुड बी गुड सो वी अप्लाइंग ओपिक फॉर एन अलॉटमेंट अ वेरी स्मॉल इशू राइट 650 crores एंकर बुक पे क्या एक्सपेक्टेशन है फ्रॉम व्हाट आई अंडरस्टैंड एंकर बुक शुड बी प्रीटी गुड देयर शुड बी क्वाइट अ फ्यू गुड नेम्स स्पेशली फॉर अ 650 crore issue
Yeah, मतलब given the size of the anchor, I feel that should be the finest till date, one of the finest.
got it okay understood that is with respect to Kusumgar. With that, we'll move forward and talk about the second company. Second company we'll cover is IC Electrical. Setting up IC, incorporated in 2005, companies engaged in manufacturing of electronic equipments for railway applications and in providing engineering solutions to Indian Railways. So Railways का काम करती company. Mix of EPC and own manufacturing. We'll try and understand. In terms of the IPO, it's a 48 crore IPO. All of which is a fresh issue. Market cap 181 crores per company आ रही है. So 27% type का dilution है. FY26 financials की बात करो तो revenue 144 crores का है and PAT 14 crores का है. So it's coming like 13-14 times FY26. LM की बात करो तो LM is next gen. So that is with respect to IC Electrical. But yeah, over to you, Tanmay, Rohit, to talk about IC Electrical.
Thanks, Manish. So I think as you mentioned, they've been a fairly established company now. It's around a 20-year-old company in the railway engineering space. They focus on manufacturing electrical and electronic equipment for the railway. So they have two things. They have some manufacturing business, which is about 60% of what they do, and 40% of what they do is just EPC. So unlike, I would say, most of the other listed railway companies in the SME space, at least you have some combination of work. So they're not just one type of work. They have, like, even within manufacturing, they have two distinct segments. They do electronics, which is one segment of theirs. They do machines, which is stuff like traction motors and stuff. And then they also do electrification and EPC. And the good thing is that their business mix is shifting towards more high margin stuff. The electronics part of their business is now, I think, 30%, which was 7-8% 2-3 years ago. And that is the highest margin, highest gross margin, highest EBITDA segment, while EPC is the lowest.
Only me or Tanmay, are
I
you
cannot
also
even.
comfortable
Yeah.
as Rohit?
You can hear me?
Yes, now.
Yeah, I
Oh,
can.
okay. I think when the screen, okay, sorry. So some of the products that they make are battery chargers, alternators, traction motors. So these are maybe slightly higher complexity items. Like battery chargers, probably more of an assembly item. Alternators, traction motors. There are a lot of players who make this in the unlisted space. But these are still, I'd say, slightly higher complexity things that they make. They also make smaller parts, which are, say, low complex, like some emergency lights, some control devices, some vigilance control device and stuff, which are not that complex. But altogether, they make about, I think, 30-40 different things. Their customers, their primary customer is the railways. That might be either directly by selling to the railways or by selling to some of these companies like BHEL, Siemens and all, who then ultimately sell it on to the railways only. Now this business is in a decent segment today. The railway capex, generally, people feel that there's at least another 10, 15 years of runway in the railway space with, the electrification theme, with things like Vande Bharat and so on, the metro and the sort of push towards metros, a lot of things happening on the safety side. So there are a lot of different tailwinds within the, within the railway itself. So the segment they are in is good. Plus, I think as most people who have studied the segment will know that there are fairly painful approvals here, the RDSO approvals, all the railway testing, like that takes time. So that way, what these guys have done and where they have gotten to is a fairly, like defensible sort of place. Once you've approved, you kind of stay in the ecosystem. I think also, as I mentioned, that shift towards electronics, railway electronics is good because it's clearly visible in their margins. And they have made it clear, I think, in some of the pre-IPO interviews that they want to shift firstly more towards electronics, and they also want to bring down that EPC component from that 40% to about 30% in the medium to long term. This company is done, how much was it? About 143 crore in revenue last year. It's grown steadily, nothing like, breakthrough kind of growth. 100 became 122, became 143. This is despite them actually having raised some pre-IPO funds. But their margins have, increased quite a bit as they've shifted from low value add work to higher value add work and more on the manufacturing side. So you can see that their PAT margin is almost 10%. So I think about 14 crore PAT, which is good, and the trajectory is fairly encouraging on the margin side. 180 crore order book, which is okay. But I think this year they are planning to, ramp up the order inflows. So we'll see how that goes. There are some other products also, for example, they do, I think, DC traction motors today. They have, I think, submitted AC traction motors for approval, which I think has a slightly larger opportunity size also. So that, if it gets approved, can be a good tailwind for them. The biggest problem, so 2-3 things that are challenges with this company, and, can say with the space also, but definitely with this company. I think the first one is their whole cash flow and their receivable cycle is very poor. I think they have about 110 odd days of receivables. This excludes unbilled revenue, which is revenue where they have actually delivered the project and they've not even billed it as revenue. So if you add that, I think it is almost like 6 months of receivables plus unbilled revenue, which is quite high. Even if you say that the government is a paymaster that will delay but not default, it's still a very, stretched working capital cycle. They also have very, very high inventory days. So if you see, their overall working capital cycle is extremely heavy. I think there are some litigations also, though those litigations, as per the promoter in one of the interviews, he said that these litigations it's a certain type of litigation which has so far in the past always been decided in their favor. But you have to just keep that in mind. I think some 8-9 crore of litigations are also there. Funnily enough, this company also came, I think, 10-15 days ago. Initially, this was supposed to come as a Mainboard. Then this came as an SME. Then this got pulled out. It looked like the issue was getting cancelled. A lot of rumors were circulating. Then again, this thing came back. There was a time when the people who had purchased this in the pre-IPO guys, they were selling it, in the unlisted market at the same price that the IPO is coming at. Then the anchor book came, and the anchor book had Bengal Finance, which is Ashish Kacholia's fund. It had Sage Fund, which is a very, very high quality fund that's now started coming in SMEs. And suddenly all of that went away, and then you can see that there is a lot of interest in the grey market as well. This company is coming at a fairly low multiple. I think it's coming at 13 times. If you look at the pure play railway EPC, there are 2-3 of them. There's a Dhara Rail, and there are some other ones that are associated with just railway EPC. They don't trade at more than 13, 14, 15p. But a manufacturing business, generally with all of these approvals and all, that is a more defensible business. So if you can keep aside the working capital problems with this business, the fact that he makes reasonably complex products. You cannot compare this with a Hind rectifier, which is what they have put in the RHP. I think the Hind rectifier also shows a very high P because of an acquisition that they did, which was a loss-making acquisition. But even if you keep that aside, you can't compare with that. But directionally, the Hind rectifier makes the entire system, while these guys make some of the individual components that go into that particular system. So it maybe one day, if he's able to increase his product range and get better and better. He says he spends 5% of his revenue on R&D. Like if some of that is true, then you never know, right? Over time, if there's a re-rating also that is possible. At the asking price, it is fairly cheap. I don't know, what to make of the whole delay and some of the rumors. And, there wasn't a very good vibe of this company until the anchor book came out. And then suddenly things changed. So, I feel this is okay, definitely for listing gain, because it's coming at very, very low multiple. Even if you tack on a manufacturing multiple to 60% of their business, you'll definitely get some upside from here. But if you intend to hold this for the long term, I think do a little bit of digging into what challenges, people have with this company who have invested in this company in like pre-IPO and stuff, and just understand if those are real or those are assumed, because very high quality investors have come in Anchor, and they would have also done diligence. I know for a fact that Sage One's diligence is, they are very, very deep diligence investors. They don't just invest in anything. So it like that really helped calm, I think, a lot of people. But if you are looking to keep this for the long term, just do a little bit of your own diligence on that. That's not something we have been able to do, so I don't have any more to add on that front. Just simply laying out the various noises that are there in the market. Overall, it looks like an easy apply. I think very, very cheap at 13-14p. I personally, as of now, with what I know, I don't think I will keep this for long term if I do get allotment, or I'll make an effort to try and understand what some of those issues were if I do intend to look at this company for the long term.
Got it. Yeah, that's all of us. All of us are looking for allotment to flip this one. But yeah, the anchor book is good. It's priced in well. Nothing to lose at this price per se. And then long term, we'll have to understand the company, etc. So we'll apply and see how the manufacturing, etc. story plays if we hopefully get some allotment. Although the allotment would be very difficult in this one, right? Because it's not clashing with anything. Like you can use your money for Kusumgar or next week IPOs as well. So it's literally trying your luck. So I think this will subscription in this will shoot the roof per se. So, but yeah, that is with respect to IC Electrical. So we have covered two companies today, IC Electrical and Kusumgar. If you are in that, with that we'll kind of end today's space. I'm just seeing if there are any questions which we can take, or we can just wrap up the space. Perfect. Thank you so much, everyone, for joining. Have a great day.
Thank you.
Bye.